Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market Review, WMT, US Debt, Equities. This video presents a direct informational narration of the source document. As of August 20, 2026, the four major indices dropped collectively, with the S&P 500 seeing 158 stocks advance against 341 declines. The source document outlines today's presentation agenda. 1. Market and economic overview. 2. Fed divergence in U.S. debt. 3. Walmart earnings and guidance. 4. ISRG unexplained stock drop. 5. ServiceNow technical pullback. And 6. SpaceX lockup expiry. Section 1. Market and economic overview. The source reports that for the week ending August 15th, initial jobless claims fell to 206,000, missing the 210,000 estimate. At the same time, continuing claims rose to 1.799 million, yet the four-week average remains approximately 8% lower year over year. Section 2. Fed divergence and U.S. debt. Moving to macroeconomic policy, the source document highlights a divergence in statements from Federal Reserve officials regarding inflation and the labor market. While 2027 voter Mary Daly describes the current labor market as low hiring and low firing without driving inflation, 2028 voter Alberto Musalem suggests inflation returning to 2% is unlikely at current interest rates. This implies a structurally higher inflation floor. The source document infers that despite public mandates for 2% inflation, higher structural inflation may act as a necessary, unstated tool to dilute the massive U.S. debt burden, since tax revenues cannot realistically bridge the gap. Highlighting the scale of this issue, the source explicitly notes that U.S. public debt has officially crossed $40 trillion, surging by over $60 billion in a single day. To illustrate the velocity of this accumulation, the source points out that while the first $1 trillion in debt took 200 years to accumulate, the most recent $1 trillion was added in just 95 days. Concurrent with the 30-year Treasury yield jumping 1.07% and JP Morgan criticizing the Treasury's intervention tools as lacking credibility, the source projects the $41.1 trillion debt ceiling will be triggered in 4 to 5 months. Section 3. Walmart earnings and guidance. Transitioning to individual equities, the source document analyzes Walmart, which suffered a massive 9% single-day drop, its largest in years. The sell-off occurred despite a strong Q2, where EPS hit $0.81, revenue reached $187.94 billion, a 5.9% increase, and U.S. same-store sales came in at 8.26%. Additionally, global e-commerce and membership revenues surged 23% and 17% respectively. The source attributes the stock's punishment to forward guidance, noting Q3 EPS estimates of $0.62 to $0.64 missed the $0.60 expectation, and full-year fiscal 27 EPS guidance of $2.80 to $2.87 fell short of the $2.90 estimate. Factoring in Walmart's own $3 million share buyback executed at an average price of $117.61, the source identifies $92.80 as a critical technical support level that must hold to avoid further mean reversion. Section 4. ISRG unexplained stock drop. The source document next investigates ISRG, which experienced a sudden and unexplained 5.84% drop in afternoon trading. Plunging over 5% in just 10 to 20 minutes without any corresponding negative news or broader healthcare sector selling, the source theorizes this was driven by a large institutional block sale or a fat finger error. Acknowledging slowing growth metrics, the source document outlines an entry zone below $360 based on revised forward estimates, with absolute technical support down at $240 and heavy resistance at $500. Section 5. ServiceNow technical pullback. Moving to software, the source document addresses ServiceNow's recent price action. Following a breakout above $130, the source frames the current pullback as standard technical consolidation, citing upside targets of $147 to $159, as long as the critical $111 support remains unbroken. Section 6. SpaceX lockup expiry. Finally, the source document reviews SpaceX in light of its scheduled 7% lockup expiries on August 20th, 21st, and again in September. Pointing to massive institutional buying volume observed between $100 and $115, the source identifies the $100 to $120 range as a strong support zone, sitting below the $135 IPO price. The source document concludes its analysis by emphasizing that upward momentum will face heavy selling pressure as the stock approaches the $150 resistance level.